Hello XRP community, welcome back to the channel. Today we are waking up to one of the most volatile sessions in recent weeks. The crypto market has just seen $170 billion in liquidations over the past 24 hours, and XRP has not been spared. At the time of recording, XRP trades around $2.74, marking a correction of 3.4%. Ethereum is down 3.6% below $4,000, while Bitcoin has slipped under $100,000. Across the board, we are seeing red, with multiple altcoins facing double-digit losses. This wave of liquidations comes at a very delicate moment, because today the United States will publish its latest PCE data at 8:30 a.m. Eastern, which translates to 2:30 p.m. in Spain. The PCE report, often referred to as the Fed's preferred inflation gauge, will give us a much clearer view of where monetary policy is heading. The expectations are for a 2.7% reading on headline PCE and 2.9% on core PCE. If the data comes in lower, markets will interpret it as bullish, reinforcing expectations of more rate cuts. But if the numbers are higher, it could mean a new wave of corrections as investors brace for tighter monetary conditions. For now, the market is holding its breath. Open interest has dropped significantly. In Bitcoin, we've seen declines of around 2.7%, but in XRP the drop has been even sharper, with open interest down more than 8% in the last 24 hours. This tells us traders are closing positions and waiting for clarity, while uncertainty remains high. The heat map shows liquidation after liquidation, confirming the risk-off sentiment across the market. Looking at XRP's market cap, it currently stands at $164 billion, down from recent highs. But despite the correction, there are signs that whales are stepping in. Overnight, we tracked a massive transfer of 25.5 million XRP, worth about $71 million, moved from Kraken to an unknown cold wallet. This is not a sign of panic. It is a sign of accumulation. When whales withdraw tokens from exchanges into cold storage, it means they intend to hold long-term. They see opportunity in these price levels, not risk. Meanwhile, the institutional landscape is sending mixed signals. Fidelity has sold over 38,000 Ethereum in recent hours, adding pressure to ETH's price. BlackRock and other large players have also been trimming exposure, most likely preparing to buy at lower levels. Institutions do not chase rallies. They position themselves where they expect value to be. If they believe a correction is coming, they sell now and prepare to re-enter at more favorable prices. This is exactly the kind of strategic positioning that can move markets, and it suggests that while we may face more volatility, the long-term trajectory is still bullish. And this is where XRP stands apart. Because while Ethereum and other assets face uncertainty, XRP has a powerful narrative building behind it. Just recently, during an interview with Fox Business, a BlackRock executive was asked directly about the possibility of an XRP ETF. Their response? "I cannot answer that." That kind of response speaks volumes. Combine that with the fact that Ripple and BlackRock are already working together on real-world asset tokenization, and you begin to understand why speculation is growing. The truth is, it's becoming harder for BlackRock to stay silent. Institutions like BlackRock don't ignore opportunities forever. With the first XRP ETFs already launching, the idea of a BlackRock-backed XRP ETF no longer sounds like a fantasy. It sounds like an inevitability. And when it happens, the impact on liquidity, adoption, and price could be unlike anything we've seen before. Now, in the short term, the focus is squarely on today's PCE numbers. These inflation figures will dictate the immediate direction of markets. If inflation cools, it could provide the spark that crypto needs to bounce back strongly from the recent corrections. If inflation is hotter than expected, the pain may continue for a few more sessions. But even in that case, whales are clearly preparing for the long game, and institutions are setting up for bigger moves. Remember that corrections are part of the cycle. September is historically volatile for XRP, often bringing 10% to 25% pullbacks. Yet those pullbacks have historically been followed by strong rebounds. With October, November, and December historically bullish months, And with ETFs now approved, the bigger picture remains intact. So while today we see red on the charts and billions liquidated across exchanges, the underlying story for XRP is not one of weakness. It is one of transition. Long-term accumulation, institutional preparation, and regulatory progress are all pointing in the same direction. The next big catalyst could be right around the corner, whether it comes from macroeconomic relief, further ETF launches, or a BlackRock announcement. Stay focused, stay patient, and understand that short-term volatility often hides long-term opportunity. XRP at $2.74 may feel like a setback, but in the context of adoption, regulation, and institutional interest, it may also be seen as one of the last chances before a major revaluation.